So, Jim, you've been at this for a while. I mean, you've got decades of experience. You had a lot of time where you spent with Bill. Sometimes, probably very rarely getting praised because that's just not what Bill did. But probably some chastising every now and then. Like, what are you doing, Jim? You should know better. So, can you talk a little bit about some of the rookie mistakes that people really need to avoid?
Well, Bill would say to me, we all put our pants on one leg at a time. I
Right?
mean, I heard that like 5 times.
Yeah.
Basic rookie mistakes. Okay, I shouldn't even have to discuss this, because if you're not doing this, you're the ultimate rookie, and that is cut your losses.
Yeah.
I think if you were just throwing a dart at a Wall Street Journal, an IBD, you pasted it up on the wall and threw a dart at it, and you took all your gains at 20% and cut all your losses at 5%, you'd make money.
Mm-hmm.
Now, employing great selection criteria is going to change all that. But if you just did that, I think you could probably make money. So if you're not cutting your losses at 7% or 357 or whatever your numbers, you're a complete rookie. You're poster child. Now, and if you do that, you're going to see your results just go improve dramatically.
Right. Yeah.
Number 2 is I'm sorry, I can't read because I'm blind.
Overtrading.
Mm-hmm.
Yeah.
Here's a simple rule. If you have so many trades that you can't do a post analysis at the end of the year, you're way too many. And I found that I didn't cut my losses, got that in order. Performance went way up. I overtraded wildly too much, and I would be too short term. Now, when I started in 85, I had no clue what I was doing, but my evolution from then to now, I just trade less and less and less. I mean, in a normal year for me, I think I've opened about 7 trades this year. In 2021, which was a bad year, I think I opened 33 trades all year. When I got started in the 90s, I might have entered 100 new stocks. That's total. I don't know how many, but
you couldn't count. Yeah,
it's too many. And back in the day, you used to get a confirmation in the mail for every single trade.
Yeah.
If the mailman has a bag for you, too many. Okay.
Yeah. Well, Jim,
let's go
into a little bit more of those symptoms of overtrading, or really what causes that, because those are emotions, right? So, I mean, talk a little bit about that, dragging you, and you always have to feel like you have to do something in the market. That, especially when you're new to this, that's what people feel like they have to do.
I think overtrading is a 100% emotional, and it is, most people are either they're not cutting losses at all, or they're cutting them about right. That's not going to cause overtrading. It's greed, fear of missing out. That's the emotion that goes, oh, I'm in this one and it's okay, but look at this glittery earring shaking over here, this lure, and I'm on a margin, so I have to sell to buy, and that just causes massive churn. And I missed some names that I was well positioned in the right one, and because some shiny little lure was moving around over here, because I was watching every tick, I jumped over. It's more. I think the bigger emotion that causes overtrading is greed, fear of missing out. That's a guess. I'm not a psychologist.
But there's also that aspect of, if you're taking on a number of losses, loss after loss after loss, you might be good at cutting your losses, but if you're continuing and not recognizing maybe that the market is not conducive to trading, and you're not sitting out, then that overtrading when it's not the right environment, that can hurt quite a bit, because if you have a good loss cutting rule in there and the market is giving you this feedback and you're not listening to it, well, then kind of shame on you almost.
100%. I think it takes a little bit longer to understand the health. I mean, I'm going way back. This is early stage rookie type, whatever mistakes. Selection criteria is but anybody can screen for these names. If you, again, I'm off track, but if you only stayed in 99 comp names, you're going to miss a few that don't have earnings or whatever, but you're going to avoid almost all the disasters.
Right.
Okay. And you're going to be in the elite. That comp rating is there for a reason. If it's not excuses, are special occasions. It should happen twice a year. If I open 20 or 30 positions in a year, the comp rating is going to be below 95 for 2 of them. And I better have one heck of a really good reason to say this variable that it does not measure up is because of a reason, like PepsiCo is Celsius converted to PepsiCo and had to take a big loss to get hooked up with these guys. Now, I get that distribution agreement is money, is gold.
Yeah.
I can overlook that. NVIDIA, earnings down. There was everyone knows after the virus, people bought a ton of computers and they were stacked up. They didn't need them. But when NVIDIA reported earnings, billions of dollars greater than expected, I didn't need to have perfect set of earnings in a row. It had all the other various. So I'm off on selection criteria. I'm way off of overtrading.
Yeah, no. This gets us right into what we need to talk about. I mean, you're really talking about one of the things that will prevent you from overtrading is being more selective, not just going for anything that's up on the day, but hey, is this got that true market leader characteristic? Is this one that could be a big one? And look, they're not all going to be big ones, but it's got to have something there that's exciting. So maybe talk a little bit about what you call your TML template, the true market leader TML template, and what specifically you're looking for in order to get these big leaders that you can hold for the 6 to 8 beats and raises for earnings and, really make a good amount of money on.
I have a screen. I have 2 screens. I call it 20/20 and 40/40. And basically it screens for every variable that I'm looking at over 20% and over 40%. This is such an elite list. I eliminate all stocks below $20, $30 and that don't trade 30 million average daily dollar volume. But I want pre-tax, after-tax, ROE, sales growth, earnings estimates, and earnings beat over 20%. Now you just eliminated 99.9. You're going to come up with a list of like 30 stocks. If you're fishing in that barrel, you are fishing with the whales. Okay. That is the place. And 20 is a minimum. When I would talk to Bill, he'd go, what do you have? And I go, what do you have? And we'd go back and forth. And I'd look at his names and he almost always had a stock that had triple digit sales and earnings, not 20%. But when you start to get into liquid names, when you start running larger amounts and you have to have liquidity, I call the magic elixir sky high earnings growth with institutional liquidity, because institutions can't go in a lot of these smaller names. They can't, the market's too thin for them. Because again, if you have a company that has say $100 million worth of daily dollar volume and one that has 2 billion, and they both have 40% earnings growth, the PE on the one that does the higher daily dollar volume is going to be radically higher, because the monster funds with the 20 billion, 50 billion, they're going to own that stock for sure, versus the other one, they might not even be able to get in. So that'll make that PE go way up and the institutional demand comes in. And it also goes to selectivity. There's so very few that meet the criteria that I'm looking for. And that's the magic elixir.
So maybe, Jim, let's get into some of the examples of that came through the screen of so starting off with I guess ServiceNow, right? You want to?
Yeah, sure. That'll be great.
Right. So I just pulled up ServiceNow here on a weekly chart. So yeah, walk us through this one and why this is satisfying that criteria.
All right. EPS rating's 99. Estimates are for, I can barely see it, 27% return on equity. Earnings stability is 6. It just on every variable in here. Look at the earnings and sales growth, how consistent they are, well over 20%. I mean, and this company's market cap is how many billion?
112 billion. Yep.
I mean, this is so uniquely rare. And pre-tax, after-tax, ROE, sales growth, earnings beat. This has all of it, and it trades like water. You can. And
you know what's interesting, Jim, is that this is one of the few software stocks that didn't get hit pretty hard. Unlike there are a number of other great companies out there that are pretty liquid, but I was just looking at this over the last couple of days, and it's like, wow, ServiceNow hasn't given nearly as much back as maybe a HubSpot or an MDB, etc.
MDB, absolutely a 99 comp. Hold on. Pre-tax and return on equity are a little bit low because it's a slightly more immature company, but still, I'm willing to tolerate that. They actually just went from no pre-tax margin to having one. So I'm willing to tolerate some minor imperfection for rapid growth. Look, Palo Alto I didn't even discuss it, but it's another template stock that is cracked really hard, or not absurdly hard, but it's cracked, and it cracked a little bit on volume. But again, and the fundamental story here is unbelievable. They soak up about 1% of the $200 billion spend for this category. The room to grow. I'm so far off track. It has all the variables. Look at 2023, 42% growth, 98 EPS ranks, sales growth, earnings growth. Awesome. Some of these even have ramping, accelerating numbers. 91 RS has fallen off a little bit, but pre-tax and after-tax are good. This is just an absolute template stock. Now, just because it's a 99 comp does not mean it's buyable. It could be broken or it could be extended, but you want to be fishing in this pool. Can we do Celsius?
Yeah, let's go there.
Because Celsius has that, Bill would have that triple-digit sales and earnings growth. Look at this thing. They beat earnings by 50%. This is the easiest story to understand in the world. The market cap is what, 12 billion or 13.7 billion? Monster's market cap is 54. I see Monster's market cap as Celsius's opportunity. And the sweet spot is when what is it? 61 billion?
61.
So I think the sweet spot for market cap, at least for me, is around 10 billion. You catch it with all these numbers, and you right in front of a tidal wave of a new bull market, and it goes from upper end of small micro cap to upper end of mid cap, and you're going to catch a four banger. There's enough liquidity, enough maturity at 10 billion market cap to kind of attract that real institutional demand, and all these other variables in here. This is gold. This is such an elite name. Look at the violence. Look at the skyscrapers of blue volume in there. This is an unmistakable institutional accumulation stock. And again, assume everything I'm discussing, I am trafficking in. Everything.
Yeah, right. Yeah.
And it wouldn't be shocking that if this market got really ugly, that I could be short all this stuff. I probably won't be, but I'm covering all my bases.
Well, let's talk about booking, because BKNG, formerly known as Priceline. I mean, Priceline was one of the big leaders in 2009, and here we are over a decade later, and William Shatner's no longer the spokesperson, and we're still talking about the same company here. Why is this attracting your attention?
Because the travel industry is in fuego. I mean, hotels, airlines, everything is just on fire. And this in the fundamental variables, I call them the fundamental variables. They're all 20% or better. And what's so unique is the size. It's 114 billion market cap that trades great average daily volume. It's a 309. I mean, dude, this has everything. It's just extended. I mean, just because there's a 2.7% chance that a prior TML will reemerge as a TML again. And this one's done it. And look at the mat. How many years can you go back on a?
I just pulled up the monthly here, John.
Okay. You can't really say, you could say this thing's been digesting for 5-6 years.
Right.
Yeah. And just reemerging. I mean, I don't fight with price.
Now, what about, like, I could already hear like some people saying, oh, but this one moves a lot slower than some of the others. What would you say to that?
Bill would say to me, well, Jim, you can't have everything in high octane stock. You'll never handle the volatility. And he was dead right. He's like, you need a couple earnings, great, perfect, low earnings stability stocks. Like, remember those auto parts stocks?
AutoZone.
AutoZone.
AutoZone, he had that in 2011.
He's like, well, you got to have something to anchor the account so you don't get whipped all over the place, or your average daily percentage in your account's going to be too great for you to tolerate.
Yeah. 2010 for AutoZone.
I mean, would it be okay if you had two stocks that went up 50% and one that went up 20 called bookings? Would that be okay with you? I mean, do you want to sit for 10 years at 5.25 or 4.25, or would you be okay with bookings if it only went up 25 or 30%?
That's a good point.
And you get that 10-year return in 1 year, right? So.
And I think people are so hungry to level up their life that they end up with all their money in a Celsius or, whatever else. Extreme's a little stock, and that's another template stock that they get so far out on the volatility curve. They get too far out on margin. They're trying to run before they've even made any money, and they invariably make no money. Don't just think about your account. I don't care whether you have 10,000 or 200,000. Compound for 30 years at 15%. Okay, you're talking about $100 million. I don't know. It's more than you need. Okay? I don't know who you might be who needs more, but it's more than you need.
So Extreme is a good example here, because now this is a smaller name at this point, but sometimes in the portfolio there's room for this.
For sure there is. And these guys just emerged, I think, from losses to profits. Am I right on that? So
looks like it,
this really is eye-catching. What's the sales growth? And I can't percentage-wise.
31% is the last quarter. Okay.
I would prefer higher, but this stock is model book. It's template. It checks off all the boxes. And you need to get some younger guests who can see. I mean, but you know what? That's experience. If I read this quote and it said, education is really thin stuff without experience. Experience allows you to see first of all, most people don't even know that the average TML in a new bull market can go up between 500 and 3,000%. And if you haven't lived that, if you just see the stat, you probably don't believe it. You have to live it for a few cycles. Experience is everything. And again, don't try to run until you've been through 5-10 years in the market. There's so much time in getting that experience under your belt. It's going to help you sit through a period just like we're in right now. How much should you have? How to circle the wagons right around the elite ones that you have a cushion in that are worth saving, versus casting off all the lesser quality.
Well, and this is an important point, because what people sometimes forget is you can be an excellent top tier trader and you're still going to be wrong all the time. Like, it happens all the time. So let's talk about some of the stocks like On Holdings. That recently just had a big move.
And so these are the 99 comp not ready. So they have 99 composite, but they're not setting up right now. Technically, they're not confirming right at this point, right? They were before.
But even before the earnings report, I did not like the way it broke down the left side. I did not like the way it was stuttering in new highs. It just wasn't quite in gear. And maybe this is the blink Malcolm Gladwell thing that I see. I did not like that pattern. Now, I love the shoes. Everyone's wearing them. And if this stock were to get very, very tight again, like SMCI, is not out of the question that it will tighten up like crazy and reemerge. Palantir's a lot better off than Supermicro. If these names regain their composure, like let's flip to ANET. ANET, I said I didn't like the volatility in that prior base, the up and down. Now it emerged on wild volume, which changed my view. If you go to the daily, you'll see it better. And now I said, if this holds very, very, I don't like that breakdown in May, straight back up, down again, then it cracks again in August. Now I love the gap up into all-time new highs. And I said, that's not enough for me. It's going to have to go dead tight. And it's trying. And today it tried to go in a down 1% market. So and look at the volume drying up in the digestion over the last 4 or 5 days, 7, 8, 10 days. Look at that. This is key action. That's an institution or multiple institutions saying, we're on the bid. We're going to show we're bid for 1,000, but we're bid for 400,000 or 1 million. And so they're not taking out the offer, running the high volume. They're just sitting on the bid, and they'll take all the 100,000 lots you sell. If we come out of this, I think this could work. And this is another Can Slim template stock. Look at the variables here. Cisco split off. The guys running the show here are the excellent management, pre-tax, after-tax, ROE. Earnings beat is a little bit light, I think, on this, but still very good. And this is almost every name we're discussing is an AI beneficiary, especially Arista, Palo Alto, Supermicro. Palantir is the bedrock of AI software.
What about over like a Cloudflare, for instance? I mean, there was that news that Microsoft was coming out, kind of going to, potentially eat their lunch to a degree. Same with Palo Alto and Zscaler; those got hit at the same time, and then it just seemed like it didn't quite recover from that. And then it had a great earnings reaction that just didn't follow up.
Cloudflare is a 99 comp name that has a relative strength of 70. It's an automatic pass. Yeah. It's an automatic pass. And I use the Grinch's quote, I hate, loathe, and detest overhead supply. I'll make a special occasion, once a year, or maybe even twice a year, I'll buy a stock that has a ton of overhead. But it better have everything else and the fundamentals. But 70 RS, 99 comp is a no-go zone for me. And some of my family owns this from a million years ago. This may work, but it is not what if Bill saw this, he'd say pass. But it still may work. But we're looking for elite selectivity. Assuming ceteris paribus, everything equal, why would you choose a stock with overhead? You better have a excellent reason.
Yeah. So you know what? One last stock to talk about. This is going to kind of lead us into the next segment. Let's talk China. Futu, F-U-T-U. What's your take on China right now? I mean, for a while there, it was in the penalty box. We were like, too volatile, don't touch, too much going on with the government, restrictions. Is China out of the penalty box for you?
I really have a big problem with the leadership of China. I don't like dictators and I don't like communists and people who imprison 2 million people for no reason. But their economic engine is a debate how it's working. And the FXI almost came out a couple weeks ago. If you listen to Kyle Bass or Peter Zeihan, China as a country as we know it is going to devolve into a nothing. They're going to fade away. But I'm going to let the market tell me. FUTU is a no-go once again because of RS, because of overhead, because of the wicked volatility that even if you got in it, you probably couldn't sit with it. It's a no. But again, I'm diverging. Look at LI. If you follow Kyle Bass on Twitter, or if you just know who he is, he's super logical and he's generally a bear. And he's spouting all this crazy negative China stuff, saying things to institutional money managers like, if you have money in China, you're an idiot. But look at this stock. This stock does not say that. And so over the weekend, he had a big diatribe, and it made me think, should I be in China? And I said, I'm going to defer to the chart. This is TML quality, 300% earnings beat. Auto Group, number 5. Look at the sales and earnings growth in this thing. The estimates. It is emerging from losses or small gains but if you read the research, the analysts say there's no comparison in EVs between LI and the competition. It's a whole other category of quality. So don't listen to Kyle Bass. Look at your template stocks, and some of these Chinese stocks are, look at PDD. Their new discount Alibaba type product could be material. Now it's not quite engaged. It's 88 RS and it doesn't quite have the accumulation I'm looking for, but I am eyeballing it because of the fundamental story. I waited for 3 or 4 years before I got into Palo Alto after the IPO. I'm willing to really wait for things.